Meme stocks were all the talk this week, and they were back with a vengeance. If you remember earlier in the year, end of January, these stocks that had so much short interest were getting so much love by the Reddit and Wall Street Bets people. It was the common folk versus the hedge funds. Well, it's back. And we're going to be talking about if there is still room left to run. Yes, AMC hit all-time highs this week, but it looks like there could be a little bit more. So stay tuned for that. But if this is your first time here, my name's Nick. Welcome to Ways to Wealth. Before we get into the video, if you learn something new or you get some value, hit that like button for me. I would definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. I would appreciate that. Let's start the video by looking at what AMC has done in the past year. And what we talked about before was the January 2021 absolute skyrocket. AMC to the moon, got all the way up to 1990, and then it rapidly sold off from there. Now, if you're not familiar as to what the play is here in terms of the short squeeze or looking at companies with high short interest, I'll link a video that I did touching on the GameStop one back in the day, so it gives a little bit more context as to what a short squeeze is. But for the purpose of this video, let's talk about the play at hand. AMC, obviously, a lot of people want it to go down or think that it's going to go down because they don't go out to movies anymore with all these streaming platforms like Netflix, Disney Plus, Amazon Prime. Nobody is going to the movies anymore. That's why they're betting against it. The people are betting for AMC. They also want to win one over for the hedge funds. That's why AMC is such a popular one, especially this week. So it shot up to 1990, moving along. It does pretty well. It's tracking along, uptrend, going a little bit higher. And then all of a sudden this week, May 21st, up to, close 116% in a week. Absolutely incredible. Now, when we're talking about if this is the end, we know it was down on Friday. Let's take a look at a Forbes article that I came across that says the stock is still set up for a short squeeze. Now, forget that 100% run last week. There could be a possibility for more. So we look, written by Chuck Jones, touches a little bit on what the performance does. So 1208 last Friday, and then up to 2612. It did hit 3672 at one point, but it's since come back down a little bit. We get into this gentleman on Twitter who does post about short interest, so definitely take his name down. Ihor Duzaniski. I apologize if I butchered that, but he's with S3 Partners, and definitely go try and find him on Twitter. I've taken a look at some of his posts, and he's got multiple different companies from Tesla, GameStop, Beyond Meat. He covers the percentages of short interest. Basically, what I want to point out from this is that he estimates that shorts lost 1.2 billion so far this week, and they have lost 1.9 billion since the start of the year. So this is kind of the premise of what everybody's doing by piling on. They want people to cover their shorts, create buying pressure, shoot the stock to the moon. This is a company whose market cap was 248 million at the beginning of the year and is now 11.8 billion. Now, I know there's a lot of people on the camp of, this is a little bit crazy, or this is, manipulation. And for a company that hasn't really been able to open or operate at full capacity, 11.8 billion market cap is outrageous, especially for the value investors, or the ones that are really looking at fundamentals. So moving along, we're going to take a look at what the gentleman on Twitter found in his research. We have he estimates that 89 5.6 million shares are shorted, or 20% of the 448 million shares. We can take a look at the chart that he's posted here. The orange line is the short interest and the price is in the green action. So it gives you an indication year to date. So we see the original action that happened back in January, and we see the price action moving higher as the short interest was dropping. This is synonymous in correlation with the brokers doing margin calls, calling the people that are short, saying you need to cover your shorts, you need to protect from any further downside. So we actually see short interest start to build back up kind of when it reaches its peak. And that brings us kind of along to the way that we're at now. And the fact of the matter is that the short interest is still high in comparison to what it did previously. So we see this price increase that's happening this past week. We don't really see that fall off the cliff with the short interest. So on Duzanitsky's scale for how much potential this stock has for short interest, he ranks it a 10 out of a 10. So security is considered crowded on the short side if some or all the following occur. Okay, there's a large amount of dollars at risk on the short side. Check. There's a large proportion of a security's tradable float shorted. That's the short interest percentage. Some sites show that SI percentage, how much of the shares outstanding are shorted. If you see a very high percentage, means that a percentage of, let's say hypothetically, I have a company, I have 100 shares. Well, if 75% of those shares are shorted, that means a lot of people are betting against the company. That's kind of where, Roaring Kitty and other people have identified these opportunities. There's a scarcity of stock loan supply, high stock borrow fees. There is a limited daily trading volume, high days to cover. So these are the fundamentals that this gentleman Ihor is looking for. But he goes on to say, hold on a minute. Even when these criteria are met, it does not necessarily mean that this stock is a short squeeze candidate. He added, while it can be crowded, it might not necessarily be a short squeeze candidate. An additional variable which is necessary for a short squeeze to occur is mark-to-market losses. Now, he continued saying that a short position, no matter how crowded, that continues to be profitable cannot be squeezed. No trader will be forced to exit a position that continues to be profitable, meaning that if the hedge funds have placed a short, but there's still positive money, then the brokers won't come and call and say you need to cover anything because nothing to cover. They're profitable. So that brings us on to the second additional part that he's discussed. I mean, before we actually get onto that point, let me just say something. These hedge funds are not silly, stupid. They're billionaires for a reason. If you don't think they've hedged their position to both short and long, basically covering themselves on both sides of the trade, then I have some bad news for you, because they have definitely done that. And moving on to the second part here is that what we see in the charts, which I'll pull up right here, is that the overbought, the RSI, which indicates overbought and oversold, is approaching overbought territory. Now, what does this mean? This means that there's a lot of people that have bought into the stock. It almost seems the technical indicators are showing that there's nobody else left to buy in. So unless more and more people continue to buy in, then this may fizzle out. So we have a couple different things at play. We have the short interest still being superiorly, really high. We also have on the other side of the trade, a lot of people have already moved in this past week. So, and then you also have the fact that the mark to market or some of these short trades are still profitable and the banks and brokers aren't calling as of yet. So just kind of highlighting this point here, we have the January move that occurred right here, and we have the RSI indicator. It's between, I believe, 1 to 100. Anything under 20 is normally oversold. Anything over 80 is normally overbought, meaning that a lot of people, there's more buyers than there is sellers. So we can see here that it shot up. If we take a look at moving down the ranks to a more recent, we see that it's kind of along the same parallel here. So maybe there may be a little bit more buying. I would just caution here. It's a trade. It's not an investment. This is obviously not investment advice. This is my opinion on the matter. For me personally, I'm not putting myself in this trade. I prefer to buy companies that make money over the long run, that compound. This isn't for me. I definitely get the theory behind it, or kind of the mojo, the momentum, everything behind it. It's definitely interesting to watch. It's definitely been a highlight of 2021. But again, not for me. If it is for you, I definitely say don't forget to take some profit. I know I might get hit with paper hands, but protect yourself at the end of the day, because the hedge funds are definitely protecting themselves. But I hope you enjoyed the video. Let me know down below if you are riding AMC to the moon. I hope you enjoyed the video. If you're still here with me, don't forget, hit that thumbs up. Please consider hitting that subscribe button. I hope you all have a great week on the markets. Happy trading.